Hello investors, welcome to Prosimo, the Value Stock Analyzer. Today we are back after a little break and we are talking about what else? Mullen Automotive. We'll take a quick look at the current performance over the past couple of weeks, and we'll also review the latest news regarding the EV startup, which includes a recent influx of cash, which should comfortably keep Mullen operational for another 12 months. As always, please consider giving us a like and subscribe. Your subscriptions really mean a lot to the channel and allow us to continue making this content for you. Also, be sure to check out Prosimo.com. We've made some enhancements so that there is now a free version. Anyone can sign up and get free fundamental data. And then again, for just $5 a month, you can get all the same analysis we'll look at today. So Mullen Automotive is back at 10 cents. We haven't looked at it in a couple of weeks, but if we come down here, we can see we've actually been down in this 10, 11 cents range for quite a bit since the end of March. We did creep back up to 11 for a little bit, but then back down to 10 cents at the end of this week, ending April 14th. Considering the latest moves for Mullen has been like kind of a downward trend, the fact that they're holding steady is not bad, I guess. You might expect this price to go up a little bit considering they finally delivered their first couple of vehicles, but as always, there is a giant risk associated with Mullen Automotive. Looking into some of the news lately, we see Mullen secures $110 million in funding. This is a really big deal. They alluded to this a couple of weeks ago when we made mention of it, that they were going to have an influx of cash, and they did. They raised $90 million of capital in a Series D preferred stock exchange, and an additional $20 million as a promissory note. Now, a promissory note is just fancy for a loan. So essentially, they sold a lot of stock, which again dilutes the stock even further, and they took on $20 million in debt. And this debt is expensive, actually. If we scroll down here into the article, the notes have an annual interest rate of 15% and will increase to 20% if the interest is not paid on time. This means 15% interest rate is obviously very high. No one, hopefully listening to this, would be happy to get any loan with an interest rate of 15%. 20% penalty if interest is not paid on time for a company that's burning a lot of cash. Now, they had about $87 million in cash, I think, at the end of the previous quarter. That $87 million plus this $110 gives them a good amount of cash in the bank. But remember, they're burning probably close to between $90 and $100 million a year, probably more this year. The amount that they're burning increases significantly year over year. Another recent article from Investor Place: Mullen stock, don't get too excited by Mullen's recent deliveries. A recent delivery milestone has cast Mullen Automotive stock in a positive light. However, this doesn't mean investors should rush into the troubled meme stock. It is essential to see the bigger picture. The cons far outweigh the pros. There's actually not much new here. Investor Place loves covering Mullen Automotive. If you do a Google search for Mullen news, Investor Place has like the first 5 or 6 spots, and they have a couple of posts every single week dedicated to the company. This doesn't really outline anything new other than they did deliver some vehicles finally, but their fundamentals are still not great. If we come over here, if we come over to that income statement, quarter over quarter, we still have zero revenue. Now, we're hoping after this delivery, we'll see some positive revenue for the first time in Mullen's history at the next earnings report. But look at these operating income, minus $73 million. That was for the last quarter. That's not even for the last year. So for the last 12 months, we're well over $100 million. We're actually closer to $150 million in negative operating income. So that $110 million that they just got, plus the $87 million they already had in the bank, might float them for even less than a year if they can't get their expenses under control or can't start producing some actual revenue here. Finally, Yahoo Finance had an interesting article. Mullen Automotive, most popular amongst individual investors who own 44%. Insiders hold 6.3%. The key insights here: the considerable ownership by individual investors in Mullen Automotive indicates that they collectively have a greater say in management and business strategy. The top 25 shareholders own 22% of the company. Insiders have been selling lately. We highlighted this just a couple weeks ago, but we can see senior executives, CFO, president, CEO are selling shares. They're rewarding themselves shares, gifting themselves shares, but also selling shares. This is a little bit of a warning sign, in my opinion, especially for a company that hasn't really proved a lot of a success. They're raising a lot of money, they're taking a lot of money on, they're diluting their stock a lot, and they're paying themselves handsomely. Typically, a startup you would see founders pay themselves, once in a while. This startup, the founders, the CEO, the executive staff are paying themselves frequently. It's definitely at least a little bit of a yellow flag, if not a red flag. What do you all think? Please let us know what you think in the comments below. And that is all we have for today. I hope you found this interesting. Again, please check out this analysis for yourself on prosimo.com. Sign up for a free account to see these fundamentals for any stock just by signing up for free, and all the additional metrics for just $5 a month. Thank you all for watching and listening. Go find some value.